Yeah, let's take a look at the results here. An adjusted loss per share of 2 yuan and 67 cents. That's more than what the street had been expecting of 2 yuan and 53 cents. And when you look to the future, this current quarter, revenues and delivery numbers are lower than what the street expects. So that adds up to a kind of grim year, these set of quarters that NIO has been putting investors through, which is worse than expected and missing on the expectations. And this is an Chinese EV startup which is still yet to make money ultimately, and has been going through what feels like a lot of challenges of late as some of its nearer competitors find their feet and gather momentum.
NIO's recent quarterly loss was a significant event in the world of electric vehicles. Despite the setback, NIO remains a key player, showcasing its commitment to innovation by expanding its product lineup beyond vehicles to include the NIO phone. Wall Street is taking notice, with analysts offering diverse perspectives on NIO's stock, reflecting the dynamic nature of the EV industry. Now, the big question is, could NIO be your ticket to a comfortable retirement? NIO has recently made waves in the electric vehicle sector by diversifying its product lineup beyond just cars. This strategic move includes the introduction of the NIO phone, showcasing the company's ambition to create a comprehensive ecosystem for its users. NIO is just about products, it's about innovation, with a staggering 20% of its revenue allocated to research and development. Delving deeper, the analysts' table on NIO is quite diverse, with varying perspectives that reflect the dynamic nature of the company's trajectory. Some analysts maintain bullish stances with buy or overweight ratings, while others adopt a more conservative equal weight position. This dichotomy underscores the intricate interplay of NIO's aggressive R&D strategy, potential liquidity concerns, and the broader dynamics of the electric vehicle industry. NIO's commitment to R&D raises questions about the company's financial health while driving cutting-edge technologies like a mass-produced LiDAR system on chip and a 75-kilowatt hybrid battery. The 20% investment in R&D, although indicative of innovation, leads to concerns about liquidity needs, especially with the ever-evolving EV landscape. Now, if we examine NIO's financial landscape, we find a market capitalization of approximately $13.26 billion, underscoring the company's significance in the electric vehicle market. NIO has proactively raised funds through a convertible bond issue, a strategic move to bolster its financial position. Looking ahead, financial projections indicate an anticipated break-even point in 2024. However, concerns loom over liquidity and the company's financial runway. With substantial expenses in research and development, there's a scrutiny of whether recent fundraising efforts will adequately meet NIO's liquidity needs. This scrutiny is especially critical as NIO aims for profitability and growth opportunities in the competitive electric vehicle sector. There's also been a lot of scrutiny on NIO's standing within the competitive electric vehicle market. Examining the data reveals both successes and challenges. NIO has faced operational missteps and financing concerns, raising questions about the company's ability to navigate the complexities of the EV industry. Despite challenges, NIO is not sitting idle. The company is actively implementing strategic initiatives to counter sales challenges. This includes plans to revamp sales tactics and expand the sales headcount, showing a commitment to overcoming obstacles in the market. Moreover, NIO is leveraging cutting-edge technology to differentiate itself. The Tianchu SkyOS for vehicle operating systems and NOP+, a driver assistance software, are integral to NIO's technological leverage. Now, what's the bear case for NIO? Despite a recent convertible bond raise, there's a lingering cloud of concern around liquidity. Investors are questioning whether the substantial funds raised are sufficient to meet NIO's liquidity needs, given its hefty research and development expenses and the priority to scale up production and sales operations. Operational challenges have emerged, casting shadows on NIO's innovative image. Lower than expected delivery numbers and revenue forecasts raise flags, indicating potential credibility issues. These operational hiccups bring into question NIO's capacity to retain investor confidence and effectively compete in the high-stakes electric vehicle market. The financial terrain becomes even more complex when we consider the risks associated with insufficient funds for growth. NIO's ambitious plans demand substantial capital, and any shortfall could impede the company's growth trajectory. Meanwhile, the bull case for NIO unfolds with a strategic overview of the company's ecosystem strategy. This involves vehicles and extends to technology products like the NIO phone, showcasing the brand's commitment to enhancing user experience and fostering brand loyalty. The potential benefits of this ecosystem strategy are massive. By creating a seamless connectivity experience for NIO car owners, the company is betting on differentiating itself in the crowded electric vehicle market. Adding to the strategic moves, NIO introduces its mass-market brand, the ALPS. This is not just a branding exercise, but a calculated move to capture a broader customer base. The success of ALPS hinges on delivering quality and affordability. This combination could significantly expand NIO's market reach and position it as a formidable player against both established automakers and emerging electric vehicle competitors. The real game changer lies in the potential results of successfully executing this strategy. If NIO creates a loyal user base through its ecosystem approach and makes ALPS a viable option for a wider audience, it could lead to increased sales and a stronger market position. This marks a critical juncture for NIO, where strategic decisions and effective execution could propel the company to new heights in the dynamic electric vehicle market. But before we continue, we just want to thank you for watching this far. Now, let's take a closer look at analysts' diverse perspectives on NIO stock. Some analysts advocate a bullish stance with a buy or overweight rating, signaling confidence in the company's potential. On the other hand, a more cautious approach is evident in the equal weight stance, suggesting a balanced evaluation that considers both positive and negative factors. Delving into the factors influencing these opinions unveils a complex interplay. NIO's aggressive research and development strategy stands out as a cornerstone, showcasing the company's commitment to innovation. However, liquidity concerns add a layer of caution. Balancing innovation and financial stability becomes crucial in shaping analysts' views. What makes this all the more intriguing are the varying price targets set by different analysts. These targets range from $8 to $18.70, revealing the wide spectrum of expectations. The implications of these targets stretch beyond mere numbers. They signify the perceived potential and risks associated with NIO's future performance. But what does the crystal ball say about NIO's stock in 2030? Analysts predict a stock price of $45 in 2030, starting with the base case. To reach this, NIO needs to grow its top line at a compound annual growth rate of 26% over the next 20 years. The key factors influencing this scenario include NIO reining in costs, boosting production, and appealing to a broader audience. The global electric vehicle market's steady growth and successful launch into the US and other markets play crucial roles here. Now, onto the bull case. This scenario envisions a stock price of $72 in 2030, a testament to a more optimistic outlook. To achieve this, NIO needs significant improvement in operating cash flow, a rise in gross margins to around 14%, and successful cost management. External factors like continued EV market growth and successful global market expansion have become pivotal. In the bear case, the forecast is $22.30 in 2030. Here, potential competition with US-made EVs eligible for federal rebates and the European Commission's investigation into Chinese government EV subsidies. These factors could slash NIO's growth potential by at least half. To become a millionaire-making investment, NIO must navigate these scenarios smoothly. The growth rates needed for success are tied to factors like revenue growth, operating cash flow, and the prevailing global market conditions. NIO's journey is marked by twists and turns, and its potential as an investment hinges on how it steers through the complexities of the EV market. As investors, staying informed and vigilant is important. The electric vehicle landscape is dynamic, and NIO's performance is a reflection of this dynamism. So, keep your eyes wide open, stay tuned to the market shifts, and ask yourself, is NIO your key to a prosperous future? Drop your thoughts in the comment section down below. Moreover, if you want to know about NIO's battery innovations and advancements, simply tap on this video link. Appreciate you joining us, and keep an eye out for more thrilling content coming your way.